Hello, hello, hello. It's Francis, the Reset Sniper, and an interesting little visualization work for you to have a look at from a study group with regards to assets and valuation. That's right, assets and valuation. We sometimes like to have a little look-see at that in terms of that realm and world. And what have we got here? Well, we've got a very interesting conclusion. And by the way, if you want to follow up this article even further, I will leave a link in the bottom for you to follow it. It is in fact hosted up on Zero Hedge, but get the gist and the thrust of it right here with me. 3.5 trillion was added to the Fed's balance sheet since 2008 and 2014. So it went from 1 to 4.5 trillion. Let's just bear in mind that's essentially debt instruments that have been created. This is just in America. That's apparently on the Fed balance sheet. It's not all debt. It's not all corporate bonds with a super low sustained period of low cost of money for corporations to go buy their equity up on an ever buying circle jerk ramp with free money, virtually no interest cost, and smash your stock into its option strike prices by throwing a wall of cheap bank money at it. No. I'm not talking about corporate debt, just one central banker and how much it's added. 3.5 trillion. Quick reminder of all of that. 1 million counting to every second will take you 12 and a half days. 32 years for 1 billion. 32,000 years for 1 trillion, aka the grey boxes down here. This is 3.5 times the 32,000 years back into history, aka pre-dinosaur, for every second giving a dollar. That's right. California's overall GDP 2.9 trillion, another over-indebted debt bomb that can't afford and is creating debt on an epic scale, by the way. It's a moot point, but that's its alleged GDP at the moment. The 50 richest people in the world. Yes, let's not forget about that Gini curve, which is as bent in the middle as it possibly could be, with the 50 richest people in the world, which will include likes of Gates, Bezos, Buffett, Musk, and a few others, ranging to Zuckerberg of Facebook. And then you get the biggest companies of the world. You got Amazon and Apple and Alphabet, which is of course your CIA's technology arm, used to be called Google. Microsoft, Berkshire Hathaway, which is that sellout Warren Buffett that got the sweetheart deal on the Goldman Sachs bailout with convertible equity with a high interest rate in a low interest rate environment, convertible to equity as soon as everything was over, and a government guarantee that they would not be allowed to go bust. Hey, I'll take a no downside bet myself. Anyway, and then Amazon, of course, that you'll know about, which is growing, and just about runs and has ruined every other aspect of retail and is now your online best friend. And then you get cryptocurrency. Let's try that one again. Cryptocurrency. And what I want to say about cryptocurrency is, let's click it up and let's see. Cryptocurrency is your real bubble. That's right, guys. All this other stuff, that's okay. Here's the bubble, folks. That's your scale. Essentially, Bitcoin is roughly, what's it going? The overall market is sub 250 billion. The entire crypto market in market cap is only 250 billion. And then Bitcoin is 137 billion. That's right. The primary coin in that gold box right there, 137 billion, to scale. So it doesn't quite qualify for a full black box, which is 100. It only just qualifies to 100 billion. So it's one and a third, basically, of one black box. The rest, they are not big enough. They are only one black box, which is just around 100, just over 100 billion. And Ethereum in the blue, not nearly there. Ethereum is only 34 billion. The second biggest cryptocurrency is only 34 billion. But I want you to understand, here's the bubble, guys. Here's the bubble. And then, for our precious metal friends, never to forget them, 17 billion. The total market cap of above board silver used in solar panels, all your smartphones, being whittled away, $17 per ounce. We are estimating now by some that there's only 1 billion ounces left above ground. It is not even economic, as I was saying today on our theory weekend, or just yesterday with our theory weekend and the guys. It's not even economic to be 100% exclusive silver miner anymore. It's a byproduct. You have to be digging a hole for some other reason, and you pull it up while you're down there, aka gold, copper, one of the others. So bad investment, folks. You're going to wonder when the smackback comes. I've got another little insert for you. By the way, while all cryptos was becoming a bubble and all this other stuff just being just dandy and fine, one of your lead indicators for hubris and end of cycle markets, the art market. Yes, Christie's makes a market history. Christie's has made a market history with sales of 786 million. That's a full billion in a single sales cycle. And one such, a Leonardo da Vinci, one of his last paintings, expected to sell for 100 million, sold for 450.3 million. 450.3 million to be the legal owner of one painting done by Leonardo. And that's not a bubble either. Crypto is the only bubble. Okay, well, there you have it from your mainstream media, hitting you up on what's good an investment, what's a bad investment, what's a bubble, and what's not a bubble. Wow. Okay, that's it from me. If you like, remember to subscribe. This is the Reset Smart. Blimey, I'm stumbling over the words today. I promise I haven't had a toot yet. The Reset Sniper on your YouTube channel. Subscribe and share as you like. We'll be hitting you up on all the things that could be the signs for the beginning of the end. That art market is certainly ominous, but let's also remember, do not underestimate the ability for them to continue the pump and keep faking and keep the band playing while the Titanic does its slow motion sink. So stay away from calling tops, but there are some signs that things are getting precarious.